Benchmark Initiative launch for 2016. My name's Jamie McBrien. I'm a director of Optum 2. I'm going to take you through today in the next 30 minutes, and we'll keep it to 30 minutes, about the Australian Benchmark Initiative for this year, and give you an overview of what we're going to do and how you can participate and the value that it can bring to you and your organisation. In terms of the agenda, I'm going to do a bit of a recap from 2015. Look, there's a lot of new people on this call that haven't been involved previously, so I'd like to give you an overview of how 2015 went. I'll then take you through the roles in terms of the survey and the benchmarking study and how we go about it, the method and the approach, and how we see the 2016 survey coming together, and just an overview of some of the questions. So hopefully pretty straightforward agenda we're going to work through today. In terms of the overview, why did we do this? You know, this is the 6th year we've been running this benchmarking study for. We found 6 years ago, and it's still pretty much the case now, a lot of benchmarks are either US sourced or global, and maybe not as relevant for Australia. There's often a lot of different process differences between different countries, and everyone likes to see local studies with local information. There has been some other attempts at Australian benchmarks that have been intermittent or at best, and some of them have lacked ongoing renewal. And as well as that, the other reason we started this was to help facilitate the sharing of better practice on finance operations among Australian companies. Many of our clients that we work with say to us, well, that's fantastic, but can you take it to other people that are doing this so we get a better understanding? In a lot of these process areas, even competitive organisations, there's opportunities to share, and most people aren't against that. So an important part of this benchmarking study is sharing between different companies. So the objective of the Australian Benchmark Initiative is to build a set of finance benchmarks and facilitate the sharing of better practice between Australian organisations. And I should say in New Zealand, we've had a fair few New Zealand participants as well in this over the years. What's in it for you? It's free to participate in, but only those that participate get a free copy of the report, including all the metrics. There will be an opportunity as well to participate in better practice communities. We've had a few sessions over the years on a range of different topics where we've got people together and facilitated discussion. We'll also keep you informed of other events and communities of practice that are under study, and hopefully get you involved in those as well. So what do you get in the report? Look, the report has a detailed analysis on better practice. Importantly, it talks about, well, what does good look like? And it's nice to have some metrics and measures, but it's also good to understand what you need to do to get there. We've got quartile breakdowns in terms of poor, average, good for those measures. And we also focused on what are the key future improvement strategies and what are the trends. And that's always really insightful to see what other people are thinking about in the marketplace. And of course, you know, how you're performing against other leading Australian organisations. So in terms of the specifics for what does this look like, this is a page out of the 2015 report, the Purchase to Pay study. There's metrics, of course. People always love the metrics. The better practice guidance, which we think this is where a lot of the real value is. We try to provide enough insight to think about what's important, why do we need it, and can we have some guidance on each step of the process on what is good and what does that mean. We also have detailed commentary on each of the process areas and our insights on what we think some of the results mean and how they can apply to your organisation. So again, we know a fair few people that use the report and actually step through it and not only measure themselves against the metrics, but also think about, well, let's look at the better practice guidance and how do we stack up against that, because that's really where the improvement opportunities lie. Importantly, the future strategy. It's always great to see what people prioritise as a future strategy area and what they think is actually important. So the key questions that that you should get out of this is, well, what does good look like? How am I performing against my peers? And what does a high-performing function look like? That's pretty important to see. It's easy to sit there and go, well, we're not performing well against the metrics, but the next step then is to think about, well, what do we need to improve to get there? What's the optimal headcount for my team? You know, when I'm building those business cases, how do I justify how many people that I have? What should the cost of the function be? And importantly, what are some of the key trends? We expect you to be able to answer all of these things by being part of the study. So there's 3 separate reports which we're going to talk about, Purchase to Pay, receivables and payrolls. I know a few of you on the call have interest in specific areas. But I would encourage each of you, if your organisation has signed up, or if you've signed up on behalf of your organisation in a certain functional area, to think about inviting your colleagues that might be looking after other areas to get involved as well. It's always good for an organisation to look into all three areas of study and to think about where the improvements could lie. And it's always a pity when someone misses that opportunity. So feel free to share our information with your colleagues and get them to sign up as well if they're in a different functional area than what you are looking after. Another thing that people really love as an outcome of this is the report cards. Everyone that participates, they get an assessment of how they're going against the key measures of good, average, poor, and people really love these, and you know, particularly if they're good. I've seen a few people use it as part of their performance review to say to their boss that they're doing a fantastic job. But that aside, you know, there's hopefully some real value in this to really push forward some of your thinking and to help drive some of those business cases and discussions. In terms of a recap from 2015, probably those of you that didn't participate, probably good to hear some of the results and the sort of things that we talked about then as you look forward to 2016 and your involvement. Firstly, the number of people been involved in this has been growing. Now, this is the 6th year we've been running it. We started off with 34 in the first year, which we were pretty excited about, to be honest. But it's growing from there to 51 to 70 to 80 to 85. We think 2016 is going to be bigger. This is the biggest webinar we've ever had. The number of attendees today indicates that we should be able to knock over that 85 pretty easily. And I guess one key trend from 2011, we launched this over breakfast and had 50 people in a room and 2 people on a webinar. 2 years ago, we got rid of the breakfast because only 3 people signed up for the breakfast and 100 for the webinar. And now everything's by webinar, so you can just see that's a key trend that people seem to be embracing the webinar and avoiding the free breakfast, which is not a bad thing. So definitely growing. I think importantly though, for us, that having 85 respondents is nice, but we've also got a good quality and quantity of respondents. If we look at the median results, the number of employees is around the 1,500 mark, the median revenue is around 800 million. You know, probably 40 to 50% there are ASX listed, with the rest being private, multinational, or and a few government in there as well. So we think we've got a really good cross-section of the Australian industry and community, and having 85 companies of that sort of size is a big slice of the Australian market. You know, Australia's not that big an economy, but there's probably only in that sort of range of 500 million plus, there's probably only around 800 to 1,000 companies in Australia. So we've got a really good cross-section, we think, of the market across each of the areas of study. And that just allows us to get better insights on how things are going. In terms of some of the snapshots from this year, from last year, you know, high performance in the purchase-to-pay space. Some of these things seem like no-brainers, but amazing how many people haven't addressed some of these things. Standard processes, centralised AP in a shared service, purchase orders raised in advance, 3-way match in place, rejection processes, exception management, and invoice automation being critical to high performance. A lot of people, though, were focused on getting to some of these aspects in terms of standardising and documenting procedures, but invoice automation and workflow is something that from the beginning of the study has definitely increased in terms of people thinking about, well, how do we actually get better at it? And of course, the ongoing struggle of everyone in terms of driving and improving purchase order penetration. In terms of a quick snapshot of the metrics from last year, these are the invoices per FTE metric. The median there is around 11,400. Look, and the good quartile is 17,000 per FTE, which we think, when we do our consulting work, is probably the minimum benchmark you should be looking to achieve at 17,000 per FTE. The interesting thing, if you look in there, though, is there's a lot of organisations with 25 and 30,000 invoices per FTE and beyond, and so it's not a pipe dream. So when we talk to clients about these metrics being realisable and achievable and realistic, it's absolutely the case, and we can point at organisations that have been able to achieve well above and beyond this. And you can see again on the purchase order penetration side, they're at the top at 94%, which is pretty good, and that's where you should be aiming for. In terms of payroll, a snapshot, you know, high performers, again, standard processes, a common theme. centralised payroll reporting to finance. That was interesting. I don't know how that impacts on performance, reporting from HR or finance, but it seemed as though a lot did. Electronic employee files, employee self-service has been embraced, standard timesheets and automated award interpretation. Again, all of these things are pretty straightforward, but again, there's a few things in there that a lot of organisations are still working through. Some of the key future strategies for payroll was getting some SLAs with the business and defining that handoff, further centralisation of some of these activities, time and attendance and getting those in place, and they're also thinking about outsourcing some of these activities, which seem to be on the rise. The payroll metrics that we gathered from last year had headcount per FTE averaging about 351. The payments per FTE takes into consideration the different pay cycles of weekly, monthly, and everything else in between to think about how many pay slips per person they are processing. So you can see there the sort of measures that we're looking at. So around 351, one payroll person per 351 staff members, and moving upwards from there. In terms of receivables, some of the key things from last year was, again, centralised accounts receivable, common theme, standard and communicated policies, getting some rigorous credit assessment process, and look, we're seeing people really actually start to spend a fair bit more time on those front-end checking, and getting a good collection process. It's amazing. I was actually having a coffee with someone the other day that runs a credit outsourcing business, and he told me that he said the thing that he finds somewhat amusing is that the first step they do when the debt gets referred to them is send a letter to the client. And he said that it's amazing that they collect about 30 to 40% of uncollectible debt simply through sending a letter. And as he said, he had to ask himself the question, why isn't the organisation doing these things themselves? Getting a process around this can really drive some significant improvement. Everyone was focused on reducing DSO. It's a good measure, and it's one of those great measures where you can actually work out the cost of capital and go back to your finance director, your CEO, and say, we had DSO at 50 days representing $10 million outstanding at a cost of capital of $50,000 a year, or sorry, probably $500,000 a year. You're able to actually measure, as you bring DSO in, how that can actually improve the bottom line, notwithstanding the fact that we're in a fairly low interest rate environment. Some of the key measures, the DSO's there, and we always get the argument here that, and have clients having the argument with us that our industry is different. For me, if you look on the payable side, which is the opposite, it's pretty standard across Australia, 30 days standard terms. So you should be aiming for that 30 days DSO, given most people are paying on that. I know there's always exceptions, but that median there of 43 days, and that's something that's improved a little bit over the course of the study, from about 47 days. And an interesting thing with this number is that, we had and I think this just shows the quality and the quantity of respondent that we've got. We had a client recently that argued that our metric was potentially wrong. So they got Dun & Bradstreet, and Dun & Bradstreet's metric was 43.2, so nearly bang on the same as ours. So I think that just goes to show that I think the quality of the outcomes that we're getting really are representative of what the true picture of Australia is. And you can see there on electronic payments, it still shocks me when I get out there and I find organisations sending checks, and large organisations. In terms of the roles for the benchmarking study, which is pretty important for all of us, firstly, the sponsors of the study, the sponsors are Optum 2. We're a consulting company that helps people fix finance operations. We're process and structure experts and help people drive that sort of change. Opti BPO, which is our sister company, which helps people in outsourcing activities to the Philippines. The Association of Payroll Specialists, one of the largest and original payroll industry voices here in Australia, is also a sponsor that's joined us this year, and we're pleased to have them on board as well. In terms of the code of conduct, which is pretty important, if you're going to be a part of this, it's pretty, you want to have a level of trust that the process is going to be appropriately undertaken. In terms of the code of conduct, we commit that all data will be maintained in a secure and confidential manner. We'll only publish it at the aggregate level. We're never going to tell anyone where you ended up. so it only comes back to you at the aggregate level. We're not going to use any information that's relating to, and it will not be used for marketing purposes. We're a consulting company, but I promise you'll never get a call from us to say, we've read your data and we'd like to have a conversation with you around it. You know, we're sponsors of this. We want it to be an independent study. We want it to stand up to rigor, and we want people to have confidence in the outcome. So we've thought right from year one, this code of conduct that we spent time working on hasn't changed, and we think that's really important. On your side, though, we'd like you to make sure you provide complete and accurate data so we can get the best results. So when someone does question us, that we're able to say, well, hand on heart, we've got some fantastic results, we've got integrity in the results, and we can use it from there. The full code of conduct's on the website if you'd like to have a look at it, but we think that's a pretty important part. In terms of the method of how we approach the study each year and how we go about this, some of the key considerations when we pulled the study together, we wanted to make it easy. We wanted to make it have an online tool to make it pretty straightforward for you. We also wanted to make sure it wasn't onerous. The last thing you want is to have to spend hours or a long amount of time to work on a study such as this. We want to ensure the questions are straightforward and are relevant across organisation types. And going into our 6th year now, there's been through a fair few reviews. In year one, we got a lot of feedback going, you missed this question, change this, update that. So there's been some big leaps forward in the early years and ongoing refinement from there as things have changed and other questions have arisen. We'll provide direct support as required. If you do have an issue, give us a call, we can help. We also want to keep the metrics simple but meaningful. We've seen lots of studies that go into the nth degree of exceptions and errors, and for us it often gets to the point that it becomes meaningless and difficult to compare apples with apples. So we want to keep the metrics simple, straightforward, to give you the right information for you to make an assessment, but then importantly to think about it against better practice. The approach we go then is through this is we collect all the data, we bring it through, we check it for reasonableness. If there's things in there that seem a little bit off, we'll ring people just to confirm and validate. We'll then do some data analysis and thinking about it all. We provide our own expertise across the top to actually then pull together those reports and write them that we think ends up in a high quality report with detailed analysis that's a day to you. We use SurveyMonkey. We used to have to explain this in the early days what SurveyMonkey is. I think everyone's used SurveyMonkey now, so it doesn't really need a whole lot of explanation. So getting on in terms of the 2016 study and what's included in it and the sort of questions you should be expected to ask. Really, if you have a look across the different study areas, around 30 to 40 questions, 6 to 7 metrics, 6 to 7 key metrics. As I said, we just want to make this hopefully pretty straightforward to work through, but in enough detail that it's worthwhile. In terms of getting data, you source it from the past 12 months, and do reasonable estimates if you can't get specific. If there's questions you don't want to answer, either it's not relevant or you don't want to provide us an answer, just leave it. We'll remove that one from the pool. We suggest that you can. We suggest that you sit down and do it all in one go. It shouldn't take you more than 20 to 30 minutes if you've got the information either in front of you or you know it. If you don't, that's probably a question for yourself as well. So have a look at the study, work out what you need to know, and get in there and do it. It shouldn't take you too long. If you do get stuck or there's any issues, there's our email address for the benchmarking study, and that phone number down the bottom is the benchmarking specific phone number that comes through to resolve any queries. So in terms of the structure of each of the studies, we want to understand some general company information. Who are you? What size are you? What's your head count? We want to ask some questions around the management operating environment that you have in place. Are you centralized? Are you decentralized? Do you have good operational reporting? Do you have service levels? The process maturity, and in terms of what do you have in place and what are the process attributes? What are you thinking about in the future? And what, of course, the key metrics. So general company information, pretty straightforward. One of the things we ask you to do up front too is to confirm that you understand the code of conduct, again, which we think is pretty important. In terms of the management operating environment, these are the sort of things we want to think about. These are across all three areas of study. These questions are pretty consistent across all three, which gives us some nice comparatives of thinking, you know, how well are things going in payroll versus payables versus receivables. And then we get into the functional specific areas. We like to think of the processes in an end-to-end nature. So from the master file, from purchase orders through to payment, and these are just some high-level bullet points, but we pretty much step through the process in those 30 to 40 questions to ask you questions on each step of your process and how that applies. You can see too, in terms of future strategy, to get you to prioritise the sort of things that you think are important, which is, this is one of the things people find really valuable, seeing what others are thinking about and how that could drive them. And then, of course, collecting the metrics. And you can see there that that's the metric page in the survey. It's pretty straightforward. We want to understand your head count. We want to understand your volumes. And from there, we can pull a fair bit together. On the payroll side, again, looking at the end-to-end employee life cycle, from hire to retire, we want to think about how it's set up. What do you do with the employee file? Is time and attendance relevant to you? If so, how do you manage it? And then how do you actually process the payrolls? Again, the same sort of structure. You can see that in each of the studies, pretty much the same sort of structure in place. And again, the metrics, pretty straightforward metrics around headcount process, number of pay cycles, timesheets. Again, these metrics allow us to compare apples with apples across the respondent base. The final area then is receivables. We want to think again about how you set up the customer, how do you manage credit risk, and how do you invoice the statements. What are your standard terms? And we'll probably come back and find 95% of you again are on 30 days. But good to see that, and I say that with a bit of jest because I know a few people that have been pushing those out of late, or trying to push them out. How do you manage credit, and then your collections process, and how does that actually work? So again, you can see the same sort of structure here in terms of what are the important things to you, and again, this gives us some good insights as to where people are focusing their energies. Again, the questions are pretty straightforward. In terms of the timelines, today's the launch, so you can see there, today's the launch on the 9th of September. We keep the registrations open for the next month or so. So over the next 2 months then, the surveys will get out. We want people to start completing them. We'll inevitably then have a bunch of follow-up. We always have the same stragglers, and you know who you are, that are keen to participate, but are always the last ones to get the studies in. And that just leaves us then the December-January period to pull the report together. No one's going to really want to hear a report in December and Christmas parties, and then January everyone's at the beach. So we come back to February to publish the reports for everyone to see. In terms of the registration and how do you get involved, look, a lot of you have already registered, and thank you for that. And for those of you, there's a few of you that have a fair few of you that have registered for every study. I'll say it again. For those of you that didn't, or only registered for one of the functional areas, I'd encourage you to share it with the broader organisation so you can get that complete picture. We'll be getting out the surveys next Friday, so a week from now the surveys will be distributed to everyone that's registered. Jump on that website if you haven't registered and you're on the webinar today to get yourself involved. Look, we've gone through this pretty quickly today. The webinar is unfortunately a one-way event, and there's a fair few of you on the webinar today. But look, we look forward to your participation. We think there's a lot of value going into Year 6. We do think it's the leading study of its type in Australia. It's only going to grow from here, and we're proud to be a part of it, and we're pretty proud of the sort of results and participation and engagement of a range of organisations over time. As always, feel free to contact me. If you want to buy any of the previous year's studies, they are online to purchase. If you've got other issues or other questions that you'd like to ask about your organisation, again, feel free to contact myself directly. Give us a call on the phone number, and we can always have a conversation around how you're doing things, how things can be applied, and always just happy to share our thoughts on the market and what people are doing based on our experience as well as the studies, and always would welcome that sort of conversation. So thank you for being part of the webinar. I've kept to the time limit, which was always a good thing, and promised that up front. So enjoy the rest of your Friday, enjoy your weekend, and I look forward to you participating.